Welcome to Drill Down Earnings. We have the latest quarterly results from Texas Instruments, and what an interesting time in semiconductors if we look at the business story behind this stock on the move. I'm Cory Johnson, I'm the Chief Market Strategist for Epistrophy Capital Research, and such an interesting time in semiconductors. ASML was out telling us that things weren't very good, citing automotive. We had Taiwan Semiconductor saying that things were really good, citing automotive. So now Texas Instruments, a business that relies on automotive, what do they got to say? Let's get to that. These are Q3 numbers. These are better than expected. The actual numbers were not good, down 8% on a year-over-year basis, $4.2 billion in revenues, and that's 8 quarters of consecutive declines in profits and in revenues and in profits. While those declines are continuing, they're not quite as bad as they had been, and lots of cash flow. So revenue down 8%, operating profits down 18%, profits, net income down 20%, and free cash flow down 11%. And there are three main businesses, right? Industrial and automotive, and kind of everything else that semiconductors go into, not doing great here. And their EBIT margins slipping, again, down 10%. If you look at their segment profits, both analog and embedded, improving a little bit in those segments, but again, the overall picture is down. Now, when you look at the full business, they don't tell us every quarter what things are doing. They give us direction, but they tell us at the end of the year. So at the end of last year, automotive was 40% of revenues, industrial 34%, personal electronics 15%, toss in comm equipment or enterprise systems, and oh yeah, calculators, they still do that. But really, this is a story of automotive and industrial. So when the company came out with the numbers and suggested things weren't going to get better really quickly, the stock sold off. But as comments happened during the conference call, which we're going to hear from, the stock started to rally. It was actually up 4% in after-hours trading when all was said and done, after a 31% rise in the last year. Now, despite all the talk that a turnaround's overdue, the CEO acknowledged they have yet to see that turnaround, but they were seeing some strength in automotive, surprising in those third quarter results, and also suggesting that their customers are finally working through excess inventory. So here's Texas Instruments CEO Haviv Ilan talking about what they're seeing in automotive and why that was such a surprise to see that strength in their biggest business.
So regarding the automotive market, yes, it did grow. We said high single digits, around between 7 and 8%. And that was really driven, most of the growth came from our business in China. I think I've mentioned also in the second quarter, we saw strength in China, and automotive drove that growth as well. It kind of recurred in the third quarter. Just to give you some high-level numbers, it grew 20% in Q2 and another 20% in Q3. I think it's not a surprise that there is momentum for EVs in China. Our content is growing there, and that's what really drove the growth in the third quarter. I expect that I think this is not a one quarter thing. I think there is growing momentum there. Our automotive revenue in China is in an all new time high. So I don't think that goes down in the near future. Now, the rest of the automotive market is different. Okay, we are seeing a continued weakness over there. That revenue peaked in the third quarter of 23 and in general trended down. If I put China aside, that had a quick correction in Q1, or Q4 and Q1. The rest of the markets, I see a continued weakness. I think that's part of our, call it seasonal forecast for Q4.
So China automotive strong, that's a good sign for the world economy. Certainly a good sign for Texas Instruments. Maybe that's why the stock is rallying. But let's take a look at the drill down bite, the one number that tells us a whole lot, and a summary of these results. So when we think of third quarter results from Texas Instruments just reported today, what's important was $4.2 billion and a negative 8% mark on last year's numbers. The sales decline continues, but they say it's turning around. But I think the most important number, the drill down bite, the one number that tells you a whole lot, is 8. Not the 8% decline, it's 8 quarters in a row of shrinking revenues and shrinking profits, but the company is suggesting that maybe the worst is over. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.